It is great to have you all on the call today. The topic of today's webinar is how we can mobilize the private sector to contribute to closing the adaptation finance gap in emerging markets. So my name is Gerhard Mulder, and I'm the CEO and co-founder of Climate Risk Services. And we are here today with the Joint Impact Model Foundation, the JIM Foundation. Many of you will know the JIM. They are supported by main European development finance institutions and have a world-class finance emissions tool and impact module that is widely used in impact investment. Now, last year, we teamed up with the JIM and we made our climate risk module available to the JIM users. So we want to lower the barrier to provide access to a climate risk tool in emerging markets for banks, impact investors, and development finance institutions. And that brings us also to the topic of adaptation finance, to build a more resilient economy. According to the UNEP-FI, the adaptation finance gap in emerging markets is somewhere in the neighborhood of 200 billion to 270 billion US dollar per year. And the private sector is currently only playing a very marginal role in adaptation finance. Probably about 98% of all identified adaptation finance comes from public sources, according to the Climate Policy Initiative. But adaptation finance is also the fastest growing source of climate finance. So it also presents a real opportunity. Now, there is a new narrative that is emerging in adaptation finance, a new theory of change, if you like, because there's an untapped potential for an adaptation and resilience market driven and funded by local financial institutions that are the closest to the most vulnerable communities. In other words, if we get this right, the infrastructure to channel adaptation finance into emerging markets already exists. And that is what I want to talk about today. And today's panel is a true unique blend of actors who can play a real pivotal role, if you like, in mobilizing adaptation finance. It's going to be quite exciting here today. We have 4 speakers. I will introduce them very quickly. Dr. Chiara Trabacci, and she's the manager with British International Investment. Now, Chiara is a true hero because she's actually calling in from India at the moment. So, it's quite a pleasure to have you here, Chiara. Have we by now located Tanveer Hassan? Rebecca, have you located him, or is he AWOL at the moment?
Yeah, I have not heard from him yet.
Okay, all right. So if all goes well, we will have Tanveer Hassan, who is an environmental and social risk specialist of Eastern Bank Limited in Bangladesh. So hopefully he will join. We also have David Diaz, who is the deputy head of the Global Climate Partnership Fund of Responsibility. And I will ask each of you to introduce your organization in just a bit. And last but not least, Adele Cadario, who is the global lead on infrastructure and nature-based solutions at the Global Center on Adaptation. So thank you everybody for tuning in. A great outcome right here. Good number of participants. If you have any questions, please put them in the chat. Rebecca will then keep track of all the questions and read them out loud, but also feel free to come off mute. Just raise your hand and then we will give you the floor. We really want to make this interactive. So don't feel that you can't interrupt us. That is not a problem. And we will also leave room for further discussion at the end of this webinar. So I would first like to go to Chiara. Thanks again, Chiara, for tuning in from India here today. You've been working at the British International Investment for quite some years now on climate. And what is BII doing at the moment to close the adaptation finance gap in emerging markets?
Thank you, Gareth, and good morning, good afternoon, everyone. And hopefully you won't hear all the background noise because actually I'm at the airport. So if you see me running, I'm running into the plane, not to lose my flight, not to miss my flight.
No problem.
It is a key pleasure for me to be here. On the one hand, because adaptation and resilience investing is a core passion of mine. I actually did my PhD on the topic several years ago. And at BII, as you said, Gerard, I'm leading on the organization approach on adaptation and resilience, investing and financing, and also on climate risk integration within the risk management framework, particularly in the investment process. So for those of you that do not know British International Investment, BII in short, it is the UK development finance institution. It provides patient and flexible capital to create more productive, sustainable, and inclusive economies in Africa, Southeast Asia, and the Caribbean. Adaptation is actually a key building block of BII climate change strategy. And to be very practical in what is our two-pronged approach to close the adaptation finance gap. So the organization very much aims to work both on the supply and demand side of adaptation and resilience financing. And this means, on the one hand, investing to adapt, which means working with investees to help them understand and address the physical risks they might be facing. And this is particularly relevant in the context of, for instance, infrastructure assets, given their long-lived nature, and also the cascading effects on service provision the failure to adapt may actually cause. And can provide example later on of specific projects on which we actually have examples on the ground on our work. On the other side of the coin, we are also working with and investing in companies offering adaptation and resilience enabling solutions. So those solutions that very much can enable people, businesses, but also nature to adapt and become more resilient to climate shocks. And actually, I mean, the World Economic Forum highlighted that this is a $2 trillion business because, the intensifying effects of climate change, the damages effects that we are witnessing is driving the demand for adaptation and resilience solutions. So more entrepreneurs, more companies are coming to the fore with the solutions that we need to address floods, droughts, extreme heat, wildfires. It is important to consider that we can indeed play a role as investors on both sides of the coin, working with investees to understand that there is an issue and the issue needs to be addressed, and also working with other investees offering the solution and basically acting as matchmakers, if you like, to close the understanding within the how to do it, what to do it, and also what type of solution are in the market to address some of the issues our investees are facing. Happy to answer any question that may emerge during the discussion.
Yeah, fantastic. And you're coming across loud and, perfectly fine and clear, Chiara. So really good. And if I just may build on that, right? So if you're engaging with these, I fully agree, right? This is a fantastic, unfortunate, it's a necessary, but it's also a really interesting new financing opportunity, a $2 trillion market, as you mentioned. But how do we prove the commercial viability, right? And how do you identify these revenue streams? And do you have a bit of an approach around that? And because I think you mentioned something really important, and that is that you actually need to work with these clients, these investees, to build their capacity as well to identify and manage all these risks and build that resilience?
So, I mean, first of all, in the context of adaptation, it's important to recognize that a significant amount of the work that investors and DFIs are doing with investees is not visible. It doesn't translate in dollars. It comes with engagement, capacity building. Actually, I came here, you know, to Mumbai, and today I'm in Bangalore to train our investees on climate risk management. So we are here to build capabilities. And so this doesn't translate necessarily in you know, capital expenditure or additional equity, you know, that can be tracked by, you know, these international initiatives, but becomes clear and critical value because adaptation also means building capabilities, business processes and systems. When it comes to, like, let's say, the more specifics around, you know, what is the business case? So it depends. In the context of the adaptation of assets, so for instance, we work with one of our investees in Pakistan that has a wind farm in a flood-prone area. So we work with this investee to basically enhance and support a program of mangrove protection and rehabilitation. And this ultimately has been estimated to generate 1 million cost reduction in terms of maintenance cost over the 25 years lifespan of the asset, and also benefit local communities. I mean, if you think about like the actual cost of the mangrove restoration was not, you know, that meaningful, I mean, in terms of quantum, but ultimately the benefit associated with it is actually, you know, quite substantial. So 1 million in maintenance costs avoided, and also certainly the socioeconomic benefits within the context where the operator you know, is located. But certainly, like, there are other opportunities. So there are companies offering you know, climate insurance, companies offering early warning system, companies offering you know, drip irrigation, solar power drip irrigation, modular cold storage system to avoid food losses in the context. So there are like a variety of technological products and services that are coming to the fore that very much also represent a key investment opportunities. And we as investors need to support these businesses to grow and reach scale and expand access to their product and services across markets and across customer segments, if I can say so.
Yeah. Amazing. Well, thank you so much. That's really helpful. Really helpful. And I also see Tanvir. Tanvir, welcome. Really nice to see you. It's I believe about 7:15 in the evening for you. So thank you very much for sacrificing your part of your evening for us and to be here with you, with us. Maybe you can introduce yourself, Tanvir, and also introduce Eastern Bank Limited, and perhaps answer the question on how Eastern Bank is integrating climate risk into its lending decisions, in particular, of course, for sectors that are vulnerable to physical climate risks. Being in Bangladesh seems quite obvious that this would address quite a need. Over to you.
Yes, thank you. Thank you, Climate Risk Service and Jim Foundation for inviting me for this webinar. And also thanks to the participants who were putting their time into this session. Well, I'm Tanvir Hassan. I'm working in Eastern Bank PLC, Dhaka, Bangladesh for the last 6.5 years. So I work as an environment and social risk specialist in the bank. So our bank is a private commercial bank in Bangladesh. So we have a history of over 30 years of business experience in the private sector. So in EBL, we started the environmental and social practice back in 2008-9. So for the last 15 years, we're doing the ENS practice in the bank regarding our portfolio, our customers, our business, and hence we have developed partnership with TFIs. over the last 3 years, we have involved into the climate aspect of the business. So since 2022, we have been involved with the JIM Foundation, the Joint Impact Model Foundation for the carbon accounting projects. So which help us to identify our portfolio level emission. So for the last 2.5 years, we are capturing the data from the emitting sector, which sectors are emitting what kind of carbon and what percentage of carbon are emitting. So it is one part of climate assessment. The next is we are currently doing the scope 1 and 2 emissions, so that will provide us the whole portfolio level and internal consumption or internal operational carbon footprint. That will help us to understand the net zero, and our goal is to uh, become net zero when we are ready to declare ourselves. So now is the we have already developed the baseline. uh, and the last year, we have also introduced the IFRS S1, the sustainability related financial disclosure, and the S2, the climate related financial disclosure. It was mandated by our central bank, the Bangladesh Bank, which helped us to understand what kind of climate aspects and we are facing right now, and what kind of measurements or assessment the banks should do and take initiative to reduce it. So we are proactively involved in the physical and transitional risk of the climate aspect, which we are currently in talk with the JIM Foundation, and hopefully will be study our pilot project with the climate risk service within this month or early next month. Uh, Bangladesh geographically is a very climate vulnerable country. So we are located into the Bay of Bengal. In the basin is very narrow down. So we have different type of climate vulnerability into different part of Bangladesh. So if you go to the south region, there is a Bay of Bengal. So the cyclone is probability of cyclone is heavy. If we go to the north, there is a probability of drought. If we go to the northeast, there is a probability of the uh, flash flood, which happened in last year. So there is a massive flash flood. So for us to identify the climate aspect, the physical risk of the customers is very important for mitigating the climate risk of the customers and involving them into a more climate suitable environment. So this kind of projects we are currently taking, what we can move forward into the next aspect when we are identify the uh, high risk sector climate vulnerable, if kind of for example in the agriculture part. So evaluating the water scarcity, the heat stress, the extreme event, weather event, that will be helpful for the agricultural portfolio. For the textile and manufacturing, there will be an assessment of the energy efficiency and exposure to the supply chain disruption. And regarding the infrastructure, we will be identifying uh, the flash flood factoring, extreme heat exposure, and also the resilience measures. So this will help us to understand which sectors are probably most vulnerable to which kind of climate risk and what is the opportunity here. So in that aspect, we are also developing some training and capacity development initiative with our DFIs and all help of JIM Foundation and Climate Service. And that will also enable us to capture more market in terms of climate financing. Right now, we are only doing, mostly doing mitigation financing. So the adaptation in our country is very less. I would say that probably the uh, the CSR program facilitates the adaptation financing, but there is an opportunity of adaptation financing through the main channel. Okay, so this is a this is a process, or this is a timeline that we want to follow. We want to incorporate the adaptation financing into our core financing activities, and that will eventually be suitable for the customers who are currently losing their livelihood due to the extreme climate events. So right now, the DFI support and also for the uh, analysis and also the IFRS reporting, that will eventually go to a framework, the climate risk framework, when we will be able to identify more precisely what kind of climate risk we are facing and what kind of measurement or the mitigation plans we can take.
That's fantastic. But I think you are representing a bit of an interesting journey, if you like. So you started the climate work, basically focusing on environmental and social issues that has a bit of a, the ESG flavor to it, the inside out perspective, right, about our impact on the environment. Then you moved into carbon accounting and scope 1 emissions, your own operations, and then your financed emissions as well. And then as a sort of a next step, a next level, you're going to be engaging with your clients on building their resilience. And this weekend, there
Yeah.
was a really interesting article in the Wall Street Journal, which I'm happy to copy into the chat, where because there's a worldwide backlash against ESG. I know you may have experienced that already. I'm sure you've read about it. And sort of the new narrative is don't talk about ESG. Let's talk about resilience. Is that resonating with you at all? Is that coming home for you as a risk manager and a banker?
Yes, sort of. I would definitely say that yes, this kind of the resilience factor is a more dynamic one because right now what we are facing, for example, in Bangladesh, that there is a the climate change is impacting very severely into our livelihood, into our system. So starting from the cyclone, from the flash flood, from the drought, so different location faces different problem, which was not common in the last decade also. So
Yeah.
right now, the resiliency is very important for the business to survive and to strive. Now, what we can predict that in ultimately in within 5-10 years, we feel that adaptation financing into the climate smart agriculture, because we are an agriculture heavy country, it will be a main focus point. Now, we are mostly focusing on mitigation financing, but when the adaptation financing uh, emerge as a new sector, then the resilience of the business will be questioned and that will be more appropriately answered. So
Yeah.
ESG has taken us this far, but the next step is resilience to the climate financing and climate risk and opportunities. So yes, I'm totally agreed with you. Yes, that is.
Yeah,
I
great. Tanvir, sorry, Gerhard. Along those lines, we have a question in the chat. Felix Ockborn asked, the central bank in Bangladesh has a requirement for banks to have a climate fund. How are you using these funds at EBL to support climate adaptation and resilience? So a bit more specific.
Yes, he's right. Yes, the central bank has provided a certain requirement to develop a climate fund, but mostly this climate fund is the CSR fund from the CSR fund right now. So the social corporate social responsibility, we have to provide at least 10% of the total budget to the climate funding or climate vulnerable sector. So right now we are what we're doing, we are collaborating with the NGOs into the climate vulnerable district. So in that district, we can provide funding uh, through fish water, for the fish water, for the climate smart agriculture, for the climate resilient buildings, or any kind of sort. But mostly this is a CSR part. What I'm talking about is a regular financing product. That product has to be emerged if we want to go big in terms of adaptation financing. Not only the CSR would not be sufficient, it will be only 1-2%. But the financing product, the financing activities is to be uh, to be channelized or to be built. So in that aspect, I believe that there are more opportunities. There are opportunities of green credit guarantee fund. There are opportunities of insurance products into the adaptation financing, where you can finance as a bank, but the insurance will be covered so that your bank is also safe and also the customer is safe in terms of the financing. So it's a new concept that needs to be developed, and we hope that within a couple of years it will be emerge as a common product for the market.
Fantastic. And thank you for that question. Thank you for answering, Tanvir, and Rebecca. Thank you for interrupting. Also, maybe I should highlight that the Jim Foundation has been working with the Central Bank of Bangladesh through the BII, if I'm not mistaken, to work with them on carbon accounting. And we at Climate Risk Services are very pleased to be engaging with the Central Bank of Bangladesh as well to develop guidelines around climate risk management and supervisory expectations. So Tanvir, we'll be meeting each other hopefully at the end of next month, and looking forward to it. David, if I may just focus on you here for a second. So Tanvir just mentioned something really interesting, I believe, and that is that when we think about climate finance, the focus usually has been on mitigation finance, right? So how can private investors such as Responsibility be incentivized to, not just focus on that, mitigation element, but also on adaptation finance? And also, please, maybe you can introduce Responsibility as well and say a few words about your organization.
No, absolutely. Thank you, Gerhard, and happy to be here. It's a great question, an important question. Responsibility Investments were an asset manager based in Switzerland, in Zurich. And we manage several funds that are focused on impact investing. Our three themes are financial inclusion, sustainable food, and of course, climate. And within climate, we're managing 3 funds today and launching new funds as well in the near future that focus on mitigation, but increasingly adaptation as well. So I'm head of financial institution investments and also deputy head of our largest climate fund, the Global Climate Partnership Fund. So happy to tell you more about that as well. I think to your question, how to catalyze private sector investment into this space, I'd say there are 2 things. I think the first is we see blended finance structures as having a really powerful role to play, where governments and DFIs can provide slightly more risk-tolerant capital at the bottom of a fund structure that makes private investors a bit more comfortable with the long-term and perceived higher risk that a new theme like adaptation has. So this is what we do as well. So Responsibilities, 3 climate funds, for example, are blended finance instruments, and we have governments and development finance institutions. And then on the top layers, we have several institutional private investors. So mobilization of that private capital is really the key. And the second thing I'd say is that you need to kind of know what you're doing. You need to have real expertise. And it's not just funding. I really like what Chiara and Tanvir said. You have to combine long-term funding with in-house advisory, close capacity building, as well as technical assistance. So Responsibility, we have an in-house team of engineers and climate smart agriculture specialists, in addition to grant capital that we deploy. So every project, either a financial institution that's building capacity or a direct investment, will benefit from these 3 arms. And I think combining these 3 elements is really the key to, we've deployed about 2 billion in climate investments over the last years, and it's really the sector in our space, that's in our company that's growing most quickly. Despite obviously some turbulence in terms of government and different activity in terms of support that might be provided in this space, what gives us a lot of comfort is that the fundamentals, both on the mitigation and the adaptation side, are very strong across our markets. So we're invested across 35 countries, for example, and in the climate space, and seeing a lot of demand on both sides. I would also say I think it's important to not view the 2 as a binary, right? We often talk about mitigation and adaptation as if they're 2 separate things, but it's more of a spectrum, right? And for us, we see the need to integrate adaptive considerations into mitigation investments as well. So a building that reduces energy by having more efficient lighting, for example, or as a certified green building, can also be made more resilient by taking into consideration the local climate hazards. And those 2 things are extremely important. There are areas on the spectrum where more commercial-minded investors like ourselves don't really fit. And that's really more the nature-based solutions. We're also really happy that we have people also in the meeting here, because this is a crucial space as well that not all players are designed to target. So broad spectrum, but we see a lot of appetite from the private capital space. We've raised about 500 million in the last 2 years.
Fantastic. That's really interesting, and congratulations, of course. So on those private investors, right? I mean, you're in the impact space. You've built that capacity. I think that's really fantastic that you've done that. Having worked for a bank myself, I know that banks don't finance sectors and projects that they don't understand, so they need to build that capacity in-house. But you are able to attract institutional capital, and they may not have yet that. How do you drag those the big bags of money across the finish line and say, hey, adaptation is actually a real opportunity here? How do you do
Absolutely.
that?
I mean, I think for me, a key here is again, the blended finance structure for us, especially in new areas, is a key sort of de-risking mechanism for the private investors. So the private investor sits on top of a fund structure where either more knowledgeable or more risk tolerant investors, let's say, sit beneath them. We have recently secured a rating by Moody's, for example, for one of our funds, the Global Climate Partnership Fund, at an A3 stable rating. So it's also very good to see that for a private investor to look at Moody's and say that this is an investment grade tranche also helps us a lot. But all of that depends on actually knowing what you're doing, right?
Yeah.
And I think there's a major risk of maladaptation in the space. Your question about ESG and resilience, I think that one of the problems with the whole ESG thing is that people weren't really doing what they said they were doing. So there was an understandable backlash, and maybe a good backlash, right? To make sure that players in the space are actually held to high standards. So this is how we see it from our side, a combination of factors. Yeah.
Fantastic. Thank you so much. And Adele, you just learned that David is not yet ready to put money into nature-based solutions. But I think this is your opportunity to convince him otherwise. And I also understand that you were in Oxford last week. I'd love to hear what you were doing right there and the partnership that you have developed. I used to work for IUCN, the International Union for Conservation of Nature, about 10 years ago, where I was working to develop new business and financing models for nature. And, the first, little green shoots of, pun intended, for nature-based solutions were already visible then. But I think the topic has matured over the last 10, 15 years or so. So what are you doing? And, what is the role of the GCA, and who is the GCA, by the way?
Yeah, thank you, Gerhard, and very nice to be here. Thanks for having me. And it was very interesting to listen to the different contributions from Chiara, Tanvir, and David. And indeed, I'm happy to jump on the nature-based solution topic. To explain first in a few words what is the Global Center on Adaptation, GCA. So we are an international organization that is focused at integrating adaptation solutions within flows of finance at a global scale, and really focusing on the flows of finance that would provide an impact in terms of increased resilience on the ground. So I'm leading a program on nature-based solution and infrastructure within the GCA. And what we do is mainly working at different levels. The bulk of what we do is to work with international financing institutions to make sure that development investments, especially in African countries and Bangladesh, integrate climate risks and adaptation measures, and that this flow of international development finance takes climate risks and adaptation solutions into consideration. But we are also starting to work more and more with the domestic private sector, because this is where the money hit the ground, so to speak. And so we also want to work with domestic banks, and Tanvir, your intervention was very interesting in Bangladesh, to support domestic bank understanding the impact, physical impact of climate hazards to their portfolio of investments, what are the transition risks to their portfolio, and how does it translate into financial risk at the portfolio level. And this is something that we want to increase in terms of activities to make sure that domestic finance also has the mean and capacity to take climate change and adaptation into consideration. So many things to explore there, but indeed I was in Oxford last week, and part of the infrastructure program is focused at really considering nature-based solution as a key factor to increase infrastructure resilience and socioeconomic resilience when developing new infrastructure projects. And so in partnership with the University of Oxford, the GTA has developed and launched last week global analytics to support the identification of nature-based solution that provides adaptation value and that can be integrated within the different flows of finance. So what we're seeking to do here is to really convene different types of stakeholders, from the multilateral development banks to the local partners to the private investors and other DFIs, into screening especially some opportunities for nature-based solution, and consider to deploy investments in nature-based solution with a focus on enhancing adaptation outcome of their investment at scale, at national scale. And I'm happy to touch on the different barriers that we see in implementing nature-based solution at scale, but a lot of it is assessing the benefits from these specific investments in terms of adaptation outcome, resilience outcome, and socioeconomic benefits. And so this is what this analytics developed with the University of Oxford contributes to do, is to really map nature-based intervention with the potential in terms of risks mitigation to infrastructure systems that are costly and that are very vulnerable to climate change, and therefore making a financial case to invest in this nature-based solution. I will share more in the link, but I'm happy to stop there and see if you have any further question right now, Gerhard.
Right. Well, fantastic. If I could just zoom in a bit on the barriers, if you don't mind me, trying to get my head around this. Also speaking from my own experience, I mean, at some point, I went to the Dutch government. We were talking with the RVO, which is the Netherlands Enterprise Agency, and they have this fund where they support governments in terms of developing, infrastructure. And I went to them and I said, there's this great project with where we use forest, etc. And I there was this whole spiel, and it all made sense, etc. And the person on the other side basically just bursted out laughing, and they asked, "You want me to invest in trees?" I literally remember that they were saying that. So there seems to be a bit of a bias. So to what extent do you feel is this almost like an irrational bias? Because the business case is clear. Everybody always talks about how our economy depends on nature, on ecosystem services, etc. Yet we seem to be running up against some biases when trying to get our message across. Do you experience that as well?
I'm trying to quantify and have a very evidence-based approach to nature-based solutions. So we don't invest in nature because we think it's the right thing to do, but we do invest in nature because of the financial returns that it can provide across type of investment focus and results type that we want to do. And so to your question also, Chiara, in the chat, thank you. What these tools provide is addressing key gaps that we have seen in terms of data and cost benefits assessment of nature-based solutions at scale. So what we do see is that typically the financing, that the common barriers for nature-based solution implementation includes relatively long time scales for implementation, and therefore carrying risks for a long period of time, with very strong local specificities in terms of the type of solutions and low replicability on the solutions to be implemented on the ground. And this is to be in relation to relatively small commercial returns. If you only monetize the revenue stream created from the nature-based solution itself. Therefore, what we try to provide is to enlarge a bit the way that we monetize the benefits from nature-based solutions, focusing on the direct benefits from the nature-based intervention in terms of carbon sequestration, access to carbon markets, maybe revenue streams if we are contemplating some agroforestry initiatives on equivalence, providing something for the communities. But then we also want to look at socioeconomic factors in terms of improved livelihoods, reduced poverties, improved resilience for adjacent infrastructure, physical systems, and infrastructure services that are delivered, because we do see that these nature-based solutions can reduce peak flows, can reduce riverbanks erosion, and so on, and therefore they do protect and decrease the cost of damages to larger scale assets that may be nearby. And so the analytics that has been developed and launched really help to map out NBS opportunity on a localized scale in a country, and then understand what broad benefits it can have, not only to the communities, but also to risk reduction for infrastructure systems and in terms of financial return of the investment. And that can be fed into an investor's dashboard to foster the discussion across, okay, am I investment fund really focused at socio-environmental impact of my investments? Therefore, I will consider metrics like related to NBS intervention more focused on social outcome from the investment. Or am I a very much financial return-oriented type of investor? Therefore, I would look at the benefits to cost ratio in a very plain approach. And we can compare these indicators for specific set of nature-based solution intervention to support prioritize across type of appetite and stakeholders to support the blended finance mechanism in very short.
Amazing. Yeah, so, we should adopt the idea of green where we can and gray where we must, right? I mean, it should be mainstreamed in that sense. Rebecca, how is the audience doing?
Yes.
Is any?
Yeah, we do have one question. I think Adele may have touched on this a bit, but opening it up to anyone else on the panel. Ciro Alberto Duarte asked, have there been some emerging financial instruments that show great promise towards adaptation financing? I've been seeing some ideas like resilience credits or debt for adaptation swaps, but wondering if these or other ways are now being explored by any of the institutions here.
That's a great question. So which are, we already heard sort of a blended finance structure, such as with responsibility, but I'd like to ask Chiara, before you dash off to your flight, Chiara, maybe we can have the benefit of, your answer still, and then also ask David and Tanvir, and Adele, if you have any knowledge on that, feel free to chip in. Chiara.
Happy to. Possibly, overall, I believe that investors can leverage all the capital toolkit at our disposal as DFIs and private investors to, promote and enable adaptation financing to happen and scale and grow. And these can span from, different shades of concessionality, but also thinking through the different asset classes through which we invest. So in BII, very much have been looking into investing and financing in adaptation via venture capital, project finance, infra equity, intermediate structures, so via funds, as well as financial institutions. So overall, I believe that to deliver against the challenge that we are facing and the opportunity the adaptation and resilience investment represents, I think we very much need to leverage our overall capital toolkit. Possibly to provide an example linked to what Adele was outlining in terms of nature-based solutions, BII with the so-called Climate Innovation Facility, which is kind of very much a capital pool that we, gain access to thanks to the UK government. So it's a concessional pool of capital that for instance, in one example, we are deploying in the form of a project development loan to support a first of its kind coastal resilience project in Africa. And this project aims to protect the city of Nouakchott in Mauritania from the risk of submersion and flooding and erosion. And actually, the project itself is very relevant and interesting because it leverages nature-based solutions to actually protect the coastline. And in this case, the nature-based solutions are like sand dunes that can very much be enhanced and restored to protect the area. And interestingly, the revenue stream comes from making available and usable a piece of land that wouldn't otherwise have value. So overall, the project that this project development loan is contributing towards will enhance the value of the land, but also deliver significant socioeconomic and environmental benefits in the context where the project is currently happening. So for instance, at least 75,000 people living in this low-lying area will be protected by the flooding. So this is an example of a nature-based solution at play being supported with an innovative product enabled by concessional capital. And last bit that I want to highlight, this is a project that is being led by a private asset manager, Meridiam, through its Urban Resilience Fund, thanks to this public-private partnership, obviously with BII and not only. So again, there are like private investors looking at nature-based solutions as part of the projects being happening on the ground.
Fantastic. Tanvir, do you have anything to add on this question in terms of what sort of financial instruments? You're a commercial bank in an emerging market. Do you see anything that could help you in terms of building that resilience with your clients? Give them like a sustainability-linked loan, for example, that is tied to resilience outcomes, etc. Or is it a bit too early for you? Because if it is, then I'm coming to Bangladesh, and then we can do some technical assistance together.
You're muted, Tanvir.
I think yes, it happens to the best of us. Thank you, Tanvir.
Okay. For the banks, it's a little early for Bangladesh to kind of the adaptation atmosphere. But the government as an entity is actively exploring and implementing very innovative financial instruments to bolster the climate adaptation financing. So one is the debt for adaptation swaps. So this mechanism is restructuring existing debt. So the funds which allowed to be redirect towards the climate adaptation projects. So it's a complicated project, but the government is exploring this. Also, there is with the UNDP, Bangladesh government is also doing the green and resilient debt platform. With the UNDP, Bangladesh Bank is also doing the climate resilient financing initiatives. So this partnership will actually help them mitigate the economic loss from the climate-induced disaster, enhancing the capacity of countries' adaptiveness. But most of these are kind of I would say that still is a CSR type of project or CSR type of activity. What we need to do is to introduce a bankable projects, or bankable projects means that when the banks are willing to provide fund and they are confident that they will generate immediate revenue out of it. So it can be a blended with the adaptation and mitigation sector. What one of the speakers said that we cannot put adaptation and the mitigation into two sides. It's a collaboration. So most of the projects are, if you see that there are a mixture of adaptation and mixture of mitigation percentage into the projects. So that's how we can blend it when the mitigation shows some financial benefit and the adaptation ultimately helps to resilient the environment. So I believe so this kind of financing, the blended financing, or you can say that the concessional loans or other stuffs will be helpful. But for my understanding, the risk sharing mechanism need to be addressed here. So how we can do it? We can provide credit guarantee. We can provide insurance-based climate adaptation projects, where the bank is also willing to take some risk, as well as with the government or with the insurance company, when the risk is diverse and the bank shows that there is a immediate result of revenue stream from it. As of now, I would say that Bangladesh Bank or Bangladesh government is exploring different opportunities, but the financing part is still lacking. Okay, the financing is mostly the mitigation sectors, the renewable energy, the efficient energy efficiency, the effluent treatment plants, and other stuffs. But the real adaptation projects are need to be addressed. So also there are some adaptation projects which is funded through the Green Climate Fund. So in Bangladesh, we have 9 funded from the starting to the end. We have 9 proposals which is passed through the GCF. So most of them are adaptation financing, and most of them are grant. So when you are talking about adaptation financing, the concept is always is a grant project. So we have to also differentiate ourselves that no, the adaptation is a element where you need some grant, but you can also provide some guarantee, some loans, when eventually it will be benefit for the business as well.
Oh, very interesting. So we spoke with a DFI, a Development Finance Institution, the other day, and we said you should engage with your clients on climate risk, etc., and convince them to use our tool. And one of the feedbacks that we got, quite interestingly, they said, well, we actually have some private investors. If they know that we have all this risk in our books, because once you start measuring it, you need to do something about it, and perhaps these investors want to be compensated for it. Your risk profile may have gone up. We've sort of felt it was a bad line of arguments. But question for you, David, also building on that, the question from the audience here. Do you see that it could also work the other way? In other words, now you're doing all these proper risk assessments, etc., and maybe some private investors say, hey, rather than giving them, a cut on the loan, a sustainable linked loan, let's make it an unsustainable linked loan and do a couple of basis points on top of it because it's too risky.
It's a very interesting and strange perspective.
But one that is maybe on some people's minds.
No, it's a very good point. Very good point. Maybe very quickly on the great question and compliment Tanvir's response. I think also we need to think about adaptation not only as something that is served by the public realm and something that requires grants and subsidies and a kind of different approach, because there are thematics within everything in every sector where a normal traditional loan, like a financial institution could provide, would have meaningful adaptive benefits and generate cash flow. So here I'm thinking about a water treatment equipment installed by a cashmere manufacturer, for example, where you use less water in a drought affected area. And this makes your business more resilient. So we need to think about adaptation as also having a component which is very commercially relevant. And then there's a space where you need more innovative products. And I think that's where nature-based solutions and great ideas like credits, obviously, and these kinds of swaps have a really prominent role to play, because those investments aren't generating cash flow the same way that another more commercial project is, so you have to find a new instrument. And there I think there's a lot of promise, and yes, we at Responsibility, even though I said we're not looking at it today, are very passionate about this space. So we're looking to develop new things. But here I think integrity is really important. So when we think about credits, for example, what is the baseline? How are we evaluating the increment? How are we pricing these credits? And that's one thing. And the second thing is to not lose track of, not commodify the concept and really focus on also the people that are being served within these areas being conserved or restored. And then on your point, for us, it's actually the inverse. We feel that not knowing what the climate hazards are is the riskiest of all positions. So yeah. we are actually actively working with several partners to integrate climate hazard mapping into their activities. It's one of our big new initiatives as a fund across financial institutions and direct investments. So several of our funds, every direct investment has to have a climate hazard mapping. And several of our FIs are now implementing with our TA support climate hazard mapping capabilities. So I would have the opposite view, that it actually reduces the risk by understanding what you're exposed to.
Yes, no, I think we're fully aligned there, David.
I like what you said. Yeah.
But you know, sometimes you hear it's a bit of an irrational, from our point of view, arguments here. Adele, any last words from you? Because otherwise, I'm afraid we're going to have to close this off. There's one more question in the chat which I would like to address outside of this conversation, because we need to start wrapping up. But we will address it. Derek, thank you so much. Any final words from you, Adele, from below sea level?
No, thank you. But so I do so fully agree with David's statement that like taking adaptation into consideration does it only makes sense from a financial perspective. And these solutions provide high benefits to low cost type of returns, and there is a strong financial case for it. And increasing the data, the evidence base to seize the opportunity and assess the cost and benefits from adaptation really will help channel the investment fund towards the adaptation outcomes that are needed. So that would be our end goal, I think, shared across the table.
Fantastic. Thank you so much. So, ladies and gentlemen, I think we're about to wrap up. We're nearing the end. I think just hit the top of the hour. So I wanted to thank everybody for participating and for your questions. You heard it here first. We are looking at a new $2 trillion green finance opportunity. The infrastructure and all the necessary actors are in place. It is really a matter of activating it, connecting the dots. And what is needed is indeed, as we mentioned, the moving parts of the whole puzzle, I believe, are indeed doing know what you are talking about. I take that away. Do a proper climate risk assessment where there is the opportunity to provide concessional finance. That is also an important element to it. We need to build capacity and awareness across the industry, and importantly, let's not engineer our way out of the problem every time, but also think of the amazing benefits that nature and ecosystem services can provide us, because it would be a rather hot and ugly world if we would forget about the important role that nature can play. So with that, I want to thank the panelists, Adele, Chiara, David, Tanvir. I want to thank Rebecca and the Jim Foundation for organizing this, and the public for tuning in. You just spent 1 hour of your valuable time with us, and thank you so much. Bye-bye. See you next time.
Thanks, everyone.
Thanks, everyone.
Thank you. Thanks, everyone.